Um, Good evening and welcome again to Risha Training Academy, one of our usual episodes. Most of the time I do the presentation. Um, Today I decided to just speak to uh, some of the issues, more especially today focusing on um, risk management. It's one of the courses that we offer at Risha Training Academy, and I want to encourage you to register www.rishacademy.coza. You can email us at info@rishacademy.coza. You may as well WhatsApp 072 if you really want to talk over the phone. 072 314 6371 is your number. It's an exciting moment for Risha Training Academy because we just started recently, but we see signs of um, interest amongst a number of people. Um, and of course, looking at the design of a curriculum in terms of what we teach, because we want to focus on um, things that are curriculum that is relevant today, things that are applicable in your business environment, things that are applicable in your organization, in your work environment as well. Risk management is one management area that is very much paramount to any organization to succeed, because without it, many times organizations start to have challenges. And there's a history of this concept of risk management. But if we look in the year 1929, when we have a global depression, uh, economic depression, most of the organizations, including government, they started to think of how to deal with uncertainties such as that. But also, we saw around 2007, 2008, up to 2010, what happened when the markets in US collapsed because of uh, how the bonds, the loans were being offered to citizens of the USA. And when they couldn't repay, it created a lot of problems for the Wall Street. And as they say, when the Wall Street sneezes, the whole world must cough. And we have coughed really from that period. Many countries in Africa had suffered quite a lot. Countries in Eastern Europe, in some parts of Asia and South America, they've suffered quite a lot. Of course, even the US and its most powerful European countries have suffered quite a lot, because even the European countries, they started to invest quite a lot because of the booming um, of the market in the US, and they thought that they must start to put money there, and only to find that the world economy faced recession at the time. But of course, a lot of people started to realize that without risk management, you are, unlikely as an organization, you are likely to suffer quite a lot, like what happened, because this could be attributed to the fact that at the time there were no much effective risk management strategies, and we had seen a total U-turn in terms of how the banks and the insurance companies started to to deal with profiling customers. Uh, when you go to the bank to borrow money, they start to ask a lot of questions and look at your credit history, and then can determine whether you qualify for that loan or not, or whatever product that you could be looking for. It's the same as with insurance companies. I mean, when you are applying for a life cover, for instance, they will ask a number of personal questions, your health, including your physical health as well, and many other issues. And then actuaries, they calculate uh, based on that information that the client will have given. Then they say the premium is so much, and this person can be covered for this value. So that is because they are responding to issues of risk. Because if you do not um, borrow money, for instance, in a manner that is responsible as a lending institution, you are likely to get into serious problems when your clients cannot pay. I mean, we go to when you purchase a car with a bank, financed by the bank won't allow you to leave the dealership without the insurance. Why? It's because of risk management issues. They want to make sure that they don't lose out, because if you leave there without the insurance and that car gets involved in accident, it gets written off, the next thing you may not want to continue to pay for what you've borrowed. So that means the bank, they are losing. So, but it also shows that maybe the events around 2007, 2008 didn't really, as much as there were a lot of work that have been done, they have not been. You'll see with what happened in 2020 with the COVID-19. Organizations were not prepared. And I mean, I'm not talking about only big companies. I'm talking about smaller to medium companies. I'm talking about governments that were not prepared. It is because there was no anticipation of that. And that is the good thing about risk management. You should be able to anticipate events that may not really be good to you. And that is why, if you are in a small company, you would make sure that your employees are covered with UIF. You are going to make sure that your organization has business insurance. In case when you're out of operation for some time, the insurance is able to compensate you for that. So that is risk management. But if we look at what COVID-19 has done, it really exposed that whatever we've done after the global economic downturn in 2007 maybe was not so much effective, because we'd seen how many people lost jobs, how many companies collapsed, governments some could not effectively respond to this pandemic, because they were not. Remember, risk is about uncertainty. You do not know. You might have an idea that this is likely to happen, but at times you don't know when, with what magnitude. And as they say in risk management, um, there are other events that could happen, and if they happen, the impact could be very much high on organization. But maybe those events are unlikely to happen, or the likelihood of happening is very much low. Perhaps I thought this is what most of governments, uh, when they do their own reflection now, they may have said that perhaps it was unlikely, or the probability were very much low. And but you'll see that there has been a lot of movement, particularly with with big organizations, in terms of integrating risk management into their organizational strategy, because I think that is where we seem to lack. And today we speak of enterprise risk management, because you need to ensure that your risk management strategies are linked or are connected with your main strategy in the organization. The company would go to the market and borrow money for expansion. And the event happens tomorrow, that may affect them in a very negative manner. And this means that they may not be able to repay the money that they would have borrowed from the, the financing institution. So if you don't integrate your risk, you may have a number of goals that you want to achieve, long-term goals that you think as an organization, this is where you want to go in the future. But if these are not guided by and um, be integrated with the possible risks that could happen, I can tell you you are likely to have so much challenges. And that is what at Risha Training Academy we look at in our curriculum, to say there are, of course, globally, you have organizations such as COSO. It's a committee of sponsoring organizations that then now is dealing with issues of risk, making sure that risk management is integrated in the organizational strategy. And it is on the basis of that where you find, particularly in finance and insurance sector, you'll find big companies do have actually the um, positions like chief risk officers, people that would and every day look at the risk in the organization and those that are outside the organization that are likely to affect the business. You look also in the public sector, you still find that they have people like the chief directors who are responsible for risk in that particular organization. It's on that basis because there is so much emphasis on the enterprise risk management, so that you then begin to have a company-wide or organization-wide risk management strategy, instead of having one business unit running their own issues and the other business running their own issues. So that means that they, at times you may not have alignment, but with people that are only focusing on risk, then you are able to deal with it, because you must appreciate that as organization, um, you live with risk. Whatever you do, the investment decisions that you take, there are risks there. When the rating agencies said they are downgrading us or our outlook, a stable outlook, at times people don't understand these things. It is because of the risk profile, our risk exposure. Whether you're looking at political issues, you're looking at economical issues, those things, they amount to our exposure that these organizations look at. And so I'm trying to say that you need to streamline your processes in the organization, but also ensure that at the center of your organizational strategy, at the center of it, there must be risk management. The goals that you want to achieve, you must ask questions. What could go wrong in these goals? What could make me not to achieve what I want to achieve? I mean, just like every 1 January, people say this is the new year and we want to do this and this. Those are their goals. But unfortunately, when we come with these goals, we don't consider possible risk, possible events that could contribute to us not having these goals, achieving the goals that we desire. I mean, you have ISO 3100 as well. It is one framework that is talking to these issues of risk that organizations start to follow so that you can really manage risk in organization. And we've seen that this issue of artificial intelligence now that most of the companies are using, integrating that into their own strategy to ensure that they could anticipate quicker what could happen. I've wrote a blog in terms of the failures of detecting, of the failure of anticipating COVID 19. It was failure of risk management. And of course, in government, most of the time, these issues are handled at the intelligence level. So that means it's a failure of gathering information because COVID came and it was a threat. It killed people, businesses collapsed, people lost jobs. Governments have to go and find some monies, whether it's for vaccines, whether to ensure that you have sufficient beds in hospitals. So, but for government that parents may not necessarily have resources, it becomes a difficult issue. And it is because in our own processes, we don't take risk management serious. And if you look at the small business sector, that's where you find a lot of problems. This risk management issues not being taken serious, small companies not having insurances um, to deal with these uncertainties. Because in all our lives, there's always uncertainty. When you leave from your home to a particular destination, you don't know what could happen. That is uncertainty. Uh, but how then do we manage these risk issues that they hamper our progress as organizations? Um, how do we make sure that we deal with these issues? And some of these issues they go back to internal arrangements in the organization. Do we take risk management seriously? Our strategy uh, in somewhat uh, talks to risk issues. Did we do proper SWOT analysis? I've always argued most of the time that when you deal with SWOT analysis, when it comes to weakness, because weakness is an internal factor, we seem to not want to give all our weaknesses out. And because of that, risk happens and we're unable to manage them because you can't manage risk without information. So that means in organization, you have different business units that must provide information. And based on that, you are able to build even scenarios of what is likely to happen. What about the uncertainties? I mean, the economy is not growing. There's projections and forecasting by both the Reserve Bank and the World Bank and the IMF as well. Some talk about 1.1% growth this current year. Because of that, it means that there could be things that you thought you'd be able to do. The money that the company would have today, it may not be of the same value next year because of these issues. So if in our own strategies we do not sing the hymn risk management to say, when one says we want to host a conference by end of the year, we should be able to ask questions, risk related questions. What are things that may happen and that if they happen, they will affect us? What if the budget that you have today, you don't have it tomorrow? So you need to look at this internally and also look at external environment and make a thorough assessment. And risk management is not something that you do at the end of the year when the questions, why did we achieve some of these targets, and that's when people start to say we didn't perform a proper risk assessment. And I think that is where we got it wrong. These issues of risk management, we only think that it is in the companies and maybe the government institutions. It's everywhere, in the political parties, in churches, in stockfields, in business forums, associations. So it is everywhere. So if you don't integrate that, even in your planning, you are likely to have challenges. And with that, this is how I want to end this a short discussion on risk management. I invite you to enroll for this course. It's very much fascinating. Click rishacademy.com. You'll get more information then. Enroll if you want some assistance. We are here. But also, if you're an organization, you want us to run a workshop, you want us to capacitate your team or help you with some of the strategies, because we are also a consulting business. You want the strategies on the whether it's organizational strategy, is the issue of your policies, your programs. We are here. Just hit the button, and we'll be able to engage with you. And with that, thank you and God bless.